everyone, and welcome to this edition of Pearls of Fisdom with Nirmal Bang and Today, we want to put the spotlight on the FMCG sector. This has been struggling with a slowdown in rural demand, inflation concerns, as well as the general election impact, the heat waves, and of course, competitive intensity. So, what is in store when it comes to the festive season? Is that going to bring the much needed respite? What can we expect in terms of pricing strategies? Let's find out about that and lots more with Akshay D'Souza. He is independent consumer consultant. Thank you so much, Akshay, for taking time out. I think that the festive celebrations, the increased consumption anticipation is clearly what the FMCG sector is hinging on. So, what is the expectation for this festive season for the FMCG space?
Hey, thanks for having me, first of all, Aman. It's been a pleasure to kind of be on the show. So I think firstly, for the whole of FMCG, the festive season is obviously the most critical part of the year, where you're typically hoping to kind of, recover and grow, put a positive boost to sales at this period of time, right? I'm already walking into stores and I'm seeing, every square feet in our general trade, getting is packed up with, packaged foods and sweets and savories and and everything that's possible that you can use as gifting items or consumption in houses. So I think there is a lot of positive anticipation. There is positive movement that I am seeing in stores, and I think we'll just wait and make sure that all that festive guest hopping and all of that kind of comes good and consumption picks up in line with stocking that we are seeing today in the stores.
Okay. So what's the outlook then in terms of the kind of growth that we are expecting? Because, for example, you had Dabur that came out with their quarterly updates, and that indicated that it's been the weakest quarter in the last 4 years. They're talking about India volumes declining, consolidated revenues declining. Is that a trend of what's to come, Akshay?
So there have been a few good things that have happened. Let me just firstly go to that. On the consumer side, okay. I think you are seeing inflation at an all-time low, right? I think when we last saw it, I think it was at a 59-month low in India. So I think that's a very, very positive sign. A lot of that is also to do with the fact that you have global prices of foods and all of that, and oil especially under control. The risk, however, now that I see is the war situation. I think the Israel-Iran war situation is a very real threat to oil prices, and that could really impact inflation if it kind of comes good. But being as it is, let's assume that doesn't come to that, and kind of things get better from there. And I would say the festive season, looking at the moment, is of course it's been 3 or 4 tepid quarters that you've seen for rural. But also remember, we've come back on a great monsoon, right? I think it's been plus 8%. I think barring the east and northeast, rest of India seem to have a normal and above normal monsoon. So you would expect the whole kharif crop to kind of drive positive incomes into farmers' hands and even rural consumption to pick up there. I do think that a lot of these companies that have actually had slightly tepid quarters have also resorted to price cuts to drive consumption. I think we saw that with HUL. Early in the first quarter, and I think before they kind of changed tack into trying to build, taking price rise early in the first quarter again. So all of that is kind of seeming to be a more tactical input for a specific company rather than a more strategic. And I think you will see that with consumption picking up, a lot of those strategies will kind of come good on the profitability and even the growth side of the business.
Akshay, you sound very positive, and I feel like I'm the pessimist in this conversation, but I can't help but just bring up all of the factors that have been really troubling the sector, if you may. What about, your outlook in terms of rural demand? I know you did touch upon that, saying that, yes, there is going to be an improvement, because this has really been a space where we have seen rural demand lagging. It's been subdued for quite some time, and now, of course, the expectation is we are going to see a pickup. How do you see companies, that will see a pickup in their overall rural demand really expand distribution networks or tailor products to actually meet the needs of these unique rural consumers?
So let me kind of put that out under 2 factors, right? I think on the first one, I think you basically mentioned on distribution availability per se, right? And I think there have been companies that have been putting in sharp focus on this side. So let me take a specific example. You actually look at Nestle, for example. Right? Nestle is now close to 2 lakh villages covered. And about a third of them have possibly come in the last 18 to 24 months for them. But what does that really mean for Nestle and Nestle's investors, right? I think it probably means that you will now have a higher demand that you are capturing for your brands and for your business, which otherwise in the category were going to some different, or unbranded products or different products by just being available. So that's a positive sign. We also see Dabur aggressively expanding, right? I think Dabur now, I think about 1.2 lakh to 1.3 lakh villages odd they've covered. And I think this rural expansion is a long-term strategy. It's not like a 6-month, 1-year strategy. It's like a 5-year, 7-year, 10-year strategy. It's something that you keep at because that typically delivers growth for you. Now, that is about making a product available. Now, how do you really get consumers to consume, right? I think to consume, there are two really important things. You need to make sure that consumers have income levels available, right? For them to maybe consume products, and obviously products that are fair priced. Now, with COVID, we did see that a large contribution of household incomes was also going into healthcare, I think. But I do see that effect is possibly slightly behind us now. And I think we have kind of gone away from the effect of that. We do see travel and tourism picking up, which obviously means that disposable incomes are there available for the making, right? At the same time, we are also seeing, consumer companies taking active measures to drive volume. So HUL did it Q4. If you see all the impact that they had on their P&L was due to price cuts that they took in that quarter, which in Q1, they basically turned to price rise, which is essentially will stay with them for the whole year. This is typically a strategic playbook which a lot of consumer companies typically operate on. Dabur had it last quarter. They did price cuts, and I think that seemed to have come out. So if you see volume growth versus actual growth, the revenue growth, it will actually be subdued. So I think price cuts really have happened. And now at the same time, you are at an event which is a disproportionately high consumption event in the culture of India, so to speak, which is your festive season. And it's not just one, right? I think you have festivities, different set of festivities, say in the East, a different set maybe in the West, while they kind of eventually culminate in Diwali. All of it kind of comes good at that point. But I think you have a series of festival build-up that will happen, which will essentially drive consumption. And against a backdrop of low inflation and price cuts that have been happening, I think it's a very, very positive environment to making sure that kind of will continue in the days to come.
Right. So good to know that you're pretty upbeat when it comes to the rural side of it as well. So yes, they are going to look at price cuts. That's the expectation. How do you see this really weaving into their overall marketing game plan as well? Because a lot of these FMCG companies at a time like this, with an expectation of a surge in festivities, really look at price adjustments, and then that is also influenced by raw material costs, so the supply chain dynamics and even the market conditions. So how are you looking at the overall pricing scenario?
Yeah, that's definitely the fact. The supply chain dynamics are definitely critical, and I think we've all seen the impact of COVID happening. We've also seen the impact of shipping routes getting blocked. All of that kind of has been a big challenge, and I would really call a big risk factor being the war at the moment, because it seems to be a real threat, at least to oil prices, especially as Iran kind of gets involved in that whole war situation. And I think refineries there become definite targets from what I can see from an outside in as a consultant for them. But I think that will remain a risk factor going forward, and I don't see that is going to be something that we can control really from here. But I think we just have to wait and watch and see things go, and obviously we hope that things get better in the short term itself rather than longer term. But yes, supply chain does remain a challenge in that scenario. The political climate, for example, in Bangladesh has remained a challenge, especially for some of Indian companies like Godrej Consumer, you have folks like Dabur, all of whom kind of operate in that region. I think that demand has remained challenging. Uh, and I think those will depend on the political climate there. And I think those remain as headwinds really for the sector at the moment, both from a supply chain pricing and especially from a demand standpoint in that region. That being said, I think if you are looking at global factors will come into play. I mean, there's no denying that at all. I think all of Indian consumption now is also a function of that. But one of the other things that is happening for the large companies in India is that a lot of our regional companies are now taking their brand equity beyond a small set of and small geography, and that is a positive sign too, right? Because that essentially drives more choice to consumers. Competition is intensifying, but definitely going to put pressure on profitability for all the large brands, because now as you have more players competing for the same demand, I think you will definitely see more competition, and there will be operational efficiencies that will come into play to drive more cost economies of scale. I think that is something that brands will be focusing on to essentially make sure that profitability stays in line as they kind of grow, not just in urban but also in rural, as they kind of scale towards more and more villages and kind of may reach the deep corners of India also.
Yeah, and one can't deny as well, Akshay, when it comes to convenience, these guys have to be at the top of their game. I mean, today you're getting an iPhone, the brand new iPhone sitting at the comfort of your home. You're getting electronic devices, food, you name it, in a matter of 10 minutes or even in half an hour, which is great. So what are some of these FMCG companies doing to stay on top of their game? Is quick commerce going to be the route that they will have to take over e-commerce?
Yeah, no. So the answer is, have they got to be on quick commerce? Answer is yes. Will it be the route they take over e-commerce? Answer is that they got to take every route where the consumer is available. That's really the real root of it. Wherever there's demand available, you will see consumer companies being available there. So, for example, I think quick commerce today is become a convenience that none of us expected will take off the way it did. And I think that has been obviously great for consumers, right? Because you have convenience and speed of delivery kind of driving your whole consumption at the same point. Like, for example, ice creams today have almost doubled. There are brands that have more than double-digit sales coming from quick commerce, which is fantastic, right? I think it's given a new lease of life to consumption in some of those categories. So I think quick commerce is definitely driving the whole e-com revolution at a much, much faster rate. We are seeing almost all e-commerce players putting out strategies for quick commerce going forward. I think that's definitely happening at the moment. While India kind of did this wonderful, payments revolution, I think we saw the whole emergence of UPI, which we are saying we are going to take global, and we are helping other countries adopt it. I'm sure there are e-commerce companies worldwide who are trying to figure out exactly how they can kind of mimic the quick commerce model from India and take it to even other countries. I think that's going to possibly be the next export that we have. And this is not even counting the impact that ONDC could have in future. I think at the moment, ONDC still early days, select categories on the platform. But that again is possibly a revolutionary idea there. I think you can see that if that goose is cooked, I think you will see that that's one more area where demand could flow in for consumers. And for consumer companies, they just have to be available there. I think there is no choice. If they are not available, somebody else gets that business. And that's the name of the game. Availability on all channels, 360 degrees. I think omni-channel approach is necessary. You cannot say I'll be on one and not on other. I think you just have to be available on all. I think that's the future of where it's going.
Yeah, for sure. That's the name of the game, it seems. What about your observations when it comes to some of the smaller private labels? Is that growing faster than some of the larger manufacturers just when it comes to the mainstream pricing segment? And how are they shaping up as compared to the large manufacturers in terms of new launches, in terms of modern trade, in terms of a focus on maybe sustainable natural ingredients?
So regional players in some of the packaged food categories have actually done very, very well. Some of them have actually been able to grow at a much, much faster rate than traditional brands have. The large brands have been. But it's also because they've been very nimble. They have been the ability to kind of entrench deeply in those geographies, and they've been able to execute very well on that game plan. But now I think what you're also seeing is some of those brands looking at naturally progressing into a larger geography. So you see them now looking at, say, if you are a player from the east, you will want to maybe progress a little bit to the north, and then drive that brand equity that kind of translates from east to north to kind of to consumers there. So that is happening. And obviously we also have mass media available. So I think the marketing strategy, national marketing strategy is kind of coming into force over there for them to drive. But I think the key is obviously to balance profitable growth. And while they expand, initially you may see some of these regional brands struggle on profitability compared to the large guys, because obviously the investments on expansion are not going to be as proportionally as high as it will be for the regional. But that being said, I would definitely see that a lot of these regional brands now aggressively will continue to do pan-India presence. That you're seeing that in packaged food, we're seeing that in spices, we're seeing that especially in spices, we're seeing that it's been a very fragmented market, so to speak, with a lot of regional preference. Some of them are trying to break through and kind of go to more homogeneous geographies, or trying to customize products that are built for specific markets that are there where they will serve. I think so that seems to be coming through. Even in the product segment, we're seeing a lot of products of convenience, right? So I think you will see the whole blended spices becoming a greater proportion of that category rather than straight spices that you will have. So the fact that convenience is a key thing going forward. We are also seeing in phases, some of the interest on healthy options coming through across companies. You're seeing there is a conscious effort on health foods, and when they kind of hit a certain scale, to then maybe either acquire or kind of build it in-house, happening everywhere. I think you did see yoga bars get acquired by ITC. You are seeing products like the Whole Truth Foods kind of making their mark. They're having a reasonable following in terms of consumption, and so on. So I think you're seeing Tata acquired Soulful at some point. So almost all big conglomerates seem to be doing some steps in that direction. And I do think that will continue going forward as they cater to a more aware young consumer audience who have deeper pockets to spend as in the future.
Okay, so before we let you go, Akshay, I'm going to do a sort of like a quick rapid fire kind of a thing, just to gauge. I know you may have touched upon these points, but just a one-word answer. For the festive season, is it going to be a boom with e-commerce or Q-commerce?
Q-commerce.
Okay, what do customers want this festive season? Convenience or personalization?
Convenience.
What do you think is going to sell out fastest this festive season when it comes to gifting? Is it going to be chocolates or healthy treats?
I would say Son Papdi.
Okay, we'll go with that. What works
You're going to get
better
some
with
boxes.
the customers? Is it large packs, you think, or mini bite size?
For gifting, it's going to be somewhere in between. I think you will have a key 100 to 200 rupee kind of range kind of products that will typically go through.
And who is the new shopper that FMCG companies are going to target? Is it going to be Gen Z, or is it going to be millennials and sort of the older crowd that have more money power?
For the festive season, it's definitely the older crowd, because they're going to buy in bulk for gifting around.
All right, Akshay, good chatting with you. Thank you so much for joining in and giving us a view on the festive season and what it brings to for FMCG. Thank you.
Thanks a lot. Thanks a lot for having me. Bye-bye.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.